Welcome to the Fear and Greed Daily Interview. I'm Sean Aylmer. Debt collection can tell you a lot about the state of the economy, consumer spending and business confidence. And right now, one of Australia's major debt collectors is seeing a huge increase in both the number of files being referred for collection and the average debt per file. Andrew Smith is the Chief Executive Officer of ASX-listed Credit Clear, which counts Australian banks, telcos and insurers among its clients. Andrew, welcome to Fear and Greed.
Thanks for having me.
So let's start with what has happened up until now. Have companies been holding back on debt collection post, or maybe during and post COVID-19?
There's been some, huge changes over COVID in our industry. Lots of industries, led by, regulatory change or just ESG type changes made the decision over COVID not to refer work out to third-party collection agencies. So there was definitely an impact on the industry. But what we're seeing now is, led by, let's just say the ATO, an influx of additional work because it's sort of coming time to, pay for bills. So we're seeing changes across the industry where, the energy regulators had moratoriums where you weren't actually able to outsource collections. Yep. They've all now been lifted. So you were seeing local government, councils, essential services now, referring higher volumes of debt, and that's been reflected in our numbers. But not only that, is the average debts that are being referred have dramatically increased as well, over 200% in some instances.
Okay, so are we back to more normal levels, or it's actually above pre-COVID levels because there's a catch-up effect?
It is way back above pre-COVID levels. And I suppose if you look at the ATO as a litmus test, the debt levels at the ATO are exponentially higher than they were pre-pandemic. So a lot of credit providers, whether it be telcos, utilities, are sitting with a larger number of accounts on their books.
Okay. So for people not familiar with the process, how does debt collection or payments management, shall we call it, actually work? What's the when does a company call you in? What's the process you go through to try and get the money?
Well, whenever I go out in town and I let people know I'm a debt collector, I get very strange looks. And the next question I get asked, do you have a baseball bat? So, I'm very glad to hear that, you'd be glad to hear that that's not the way debt collection's done these days. And we're going through a big shift in the way, organisations collect money from their customers. And, that shift is away from traditional methods, which are typically letters and phone calls, into more digital methodology, which can be underpinned by artificial intelligence and use a net promoter score to actually manage the engagement with customers. So what will happen is you can have an organisation that has an overdue account, might be a telecommunications organisation. They have an internal team that sort of will try to resolve that account within the first sort of 30 or 60 days. And they might get to the point that they say they need to outsource that work or escalate it. Now, for the record, Credit Clear don't buy any debt. So don't confuse us with, say, a Credit Corp, who is another listed company with a similar name who predominantly buy debt. So we are assisting clients collect money from their customers. So the fundamental and most important part there is to ensure that the relationship with that customer is preserved, and those individuals who can't pay because of whatever reason, cost of living, vulnerability, financial hardship, they're treated very well. So what you want to make sure you do is outsource and streamline that process to ensure that you are, helping your clients engage with their customers in a respectful way, as opposed to those traditional methods that, people used to think about debt collection.
So you use digital means. Is it normally, let's say someone internally at a telco spent 60 days, hasn't been able to get it, says Credit Clear, can you help out? I mean, is it about emailing them? What is it about? How do you extract it?
Yeah, look, it largely starts with, using someone's personal held device, whether it be an Apple iPhone, where you can get a message, and we've found that 87% of people who get a message to their iPhone will engage with you, as opposed to only 3% will answer a phone call these days. So people are moving away from looking in their mailbox for a bill, or checking their email for an invoice to be sent through, and they'd rather deal with it easily and quickly on their phone, where there's not the friction of having a phone call at an awkward time. So what we're seeing in this digital transformation within our sector is more and more customers wanting to engage with their credit provider in a digital way rather than a traditional way.
Okay, and I mean, you do have the reputation of your customers, of Credit Clear's customers here too. Because if I'm owe money and Billy Blogs is ringing me,
Yep.
I don't really think of it as a Credit Clear. I actually think of it as the telco.
Of course. I mean, the most important part is preserving the brand reputation of our customers, right?
Yeah,
So,
yep.
being able to engage with them in a way that is respectful, empathetic, and ensuring that, there's not this, harassment type feeling within those end customers. And that's a big change in paradigm with the whole industry. You think about the Hayne Royal Commission into banking and, insurance. A lot of things that came out the back of that was making sure that those customers are treated really well. And what we've seen post COVID is that real move away from selling the debt necessarily and making it someone else's problem to saying, actually, they're our customers throughout the whole life cycle, and we need to treat them respectfully throughout the whole life cycle, even when they don't pay us. So, making sure that you can do that in a way that preserves your brand reputation, but also is efficient at collecting money is critical. And not only that, the experience of the end customer is positive.
Stay with me, Andrew. We'll be back in a minute. My guest this morning is Credit Clear CEO Andrew Smith. Okay, so on Credit Clear's side, you make money from, do you get a retainer from the telco in this example, or do you actually get a percent of what you collect?
It's a good mix. I mean, we're in a transformation phase, and a lot of our competitors would charge a commission, similarly to, Credit Clear does charge a commission model. But when you're sort of moving in terms of, digital software solutions, which a customer can completely outsource their whole collection function to us, and we can send messages that don't say Credit Clear, they actually say, they might say Vodafone, for example. So you can use a digital white label solution that's usually under a licensing agreement or a fee for service, whereas later stage collections are more around a commission on performance. Although there's lots of big companies like, say, the Commonwealth Bank that are moving away from commission-based incentives for third-party collection agencies, because of reasons that are publicised during the Hayne Royal Commission, or in fact, you've got large federal government agencies making a statement to say we're not going to no longer going to outsource collections to third parties.
Yep, I understand that one. Okay, so now you mentioned earlier on that the average debt had increased significantly. How much has it increased and why?
The increase has gone from, on our books, was $589 to $997.
Oh,
so
wow.
we're seeing a 69% increase across our portfolios this year compared to the same period last year. And the volume of files has increased by 85% as well. So we're seeing not only an increase in the amount per customer that they're owed, but also the volume of customers that have been referred on to us as well. And that is indicative of clearly the cost of living going up, the average bills are going up, but there's been a tendency for our clients who originate the debt holding on to accounts for longer because they're trying to work with their customer, and by the time it gets to us, it's like, as I said, almost $1,000.
Okay. What about the sectors, be it telcos or banking or whatever, where there are a large number of case files?
Yeah, I think the people who we're seeing struggle the most is in the essential services space. So we talk about water, gas, electricity, even council. So what you're seeing is those essential services where everyone's entitled to gas, electricity. We're seeing a large cohort of those customers flow through to us with a greater propensity to have people who are vulnerable or struggling to actually, they just can't pay the bill. And I believe that we're going to see a great deal of those customers flow through as we really feel the pinch of the rate rises, and perhaps individuals that have enjoyed only low interest rates and high property price growth, suddenly they're faced with higher inflation, higher interest rates, and they can't pay their bill. You know what I mean? So they're a new cohort of customers, not your sort of typical person that you'd expect to be experiencing financial hardship, but maybe your mum and dad who's both working. They bought a property 3 or 4 years ago. They might have a young family, and they can't pay their house loan, they can't pay their car loan, they can't pay their electricity bill. So, I think we're going into a phase of a really challenging time, and this is going to be a bigger problem for a lot of companies.
You must get some horror stories, Andrew.
Yeah, it's a pretty important role we play in the whole ecosystem. And one of the reasons why I started a collection business when I went into a traditional collection company was I believe that the collection agencies didn't necessarily have a great reputation when, threatening, harassing people to pay. And I'd never worked in debt collection myself. I just thought, there's got to be a better way to do it. If you speak to someone, you listen to why they haven't paid, and you take that philosophy around helping them through that situation, most people in Australia that we engage with are likely to come through that. And if you can work with them respectfully, they're more likely to stick to an arrangement that they make a promise to. They're more likely to talk to you if they can't make a payment. And quite frankly, it feels a lot better when you're helping someone rather than, putting someone into more financial stress.
Absolutely. Andrew, thank you for talking to Fear and Greed.
Oh, it's been a pleasure. Thank you very much for having me.
That was Andrew Smith, Chief Executive Officer of Credit Clear. This is the Fear and Greed Daily Interview. Join us every morning for the full episode of Fear and Greed, Australia's most popular business podcast. I'm Sean Aylmer. Enjoy your day.